All right, buckle up, everyone, because we're diving headfirst into some seriously wild market action.
Oh, yeah. Things are definitely getting interesting.
Trump back in the White House, and the financial world's like, wait, what just happened?
It's like a roller coaster that just took an unexpected loop-the-loop.
Exactly. And we're here to break it all down for you with some top-notch analysis from 4x.com and investing.com. They're like the Sherlock Holmes of finance, sniffing out clues and solving the mysteries of the markets.
Always a good thing to have those expert insights guiding us.
Absolutely. So let's start with the immediate aftermath. I mean, the election results came out, and the markets went kind of crazy, right?
You could say that again. F4RX.com highlighted that U.S. stocks and the dollar, well, they basically surged. Investors, it seems, are putting their faith in Trump's pro-business approach, hoping for a repeat of that economic boost we saw during his first time around.
Kind of like that feeling when your favorite sports team makes a comeback.
Yeah.
Right? Mix of hope and adrenaline.
Yeah, there's definitely an element of that. But Forex.com also pointed out that not everyone's quite so optimistic. The DAX over in Germany and the Chinese markets, yeah, they took a bit of a tumble. It's like those tariff fears are back to haunt us again.
Oh man, those tariffs. It's like that friend who always brings drama to the party, right?
Exactly. And when you think about it, it makes sense that global markets might be a little more cautious. Protectionist policies like tariffs, well, they can throw a wrench into international trade, and that creates a whole lot of economic uncertainty. It's a classic example of how what happens in one country, politically speaking, can send shockwaves across the entire financial world.
Right. It's like a butterfly flapping its wings in one place and causing a hurricane on the other side of the world.
A bit dramatic, but you get the idea.
Okay, so we've got some folks celebrating, others bracing for impact. But then there's this one player who seems to be doing its own thing. Bitcoin. FearAgX.com mentioned it hit new highs as investors piled in. They're calling it a hedge against inflation.
Bitcoin, always the maverick. What's interesting is that it's seen as this decentralized asset, outside the control of governments and central banks. So when those traditional systems start to look a bit wobbly, some investors see crypto as a safe haven. It's like a way to protect their wealth from the potential storm, so to speak.
Yeah, it's like the digital gold rush all over again.
Exactly. There's definitely a sense of that.
And speaking of those traditional systems, investing.com's analysis suggests the U.S. dollar might just keep getting stronger. They've got this currency strength chart, and the USD is sitting pretty at the top. Then it's the Canadian dollar, New Zealand dollar, Swiss franc, and we've got the Aussie dollar, British pound, Japanese yen, and bringing up the rear, the euro.
Charts can be helpful, but trying to predict currency markets, that's a tough one. It's like trying to read tea leaves. Global events can shift everything in a heartbeat, and there are just so many factors influencing those exchange rates.
It's like trying to herd cats, right? Totally unpredictable.
Pretty much.
Okay, so lots of moving pieces, lots of uncertainty. And you know who else I bet is feeling that uncertainty right now? The Federal Reserve. FRX.com mentioned their meeting is just days away, and I'm sure everyone's wondering if a rate cut is still in the cards.
Ah, yes, the Fed. They're always in the spotlight. It raises a really important question. How are Trump's policies going to impact their decision-making? I mean, they're already dealing with inflationary pressures, and now they've got to figure out what Trump's economic moves are going to do. ING analysts are still predicting a rate cut, but it'll be fascinating to see if those predictions hold up.
Talk about a high-pressure job, right? I wouldn't want to be in their shoes. But let's dig a little deeper into those Trump economic plans, shall we? Investing.com outlines some of his big promises, things like lower taxes and bringing down that national debt. Sounds good, right? But the question is it actually doable?
Well, tax cuts can definitely get the economy moving, but they also mean the government takes in less revenue. And reducing the national debt, that's a long-term project. It takes a lot of effort and discipline. It's way too early to tell if Trump can pull it off this time, but it's definitely something we'll be keeping a close eye on.
It's like that saying, talk is cheap. Want to see if you can walk the walk.
Mhm.
But one thing that really jumped out at me from investing.com was Trump's statement about ending wars. They pointed out the potential impact this could have on those safe haven currencies, the Swiss franc and the Japanese yen.
Right. Safe haven currencies, they tend to do well when there's a lot of global uncertainty, geopolitical tensions. So if those tensions start to ease, the demand for those currencies could drop. It's all connected.
Like a giant financial ecosystem.
Okay.
Okay, so we've got this whole tangled web of market reactions, global jitters, and bold promises. It's a lot to take in, but That's what we're here for, right? To untangle it all and make sense of it.
Absolutely. And I think it's worth zooming in on a few key areas that could be particularly impacted by Trump's return.
Okay, sounds good. Let's do it.
Let's start with energy. Investing.com, they think Trump's policies could be a big win for those traditional energy companies, especially the ones focused on fossil fuels.
So like oil, gas, maybe even coal making a comeback. That's kind of a big shift from all the focus on renewable energy lately, isn't it?
Yeah, definitely. Trump's always been a big supporter of fossil fuels, and his policies could create a really favorable environment for those companies. Things like increased production, less regulation, maybe even bringing back some of the projects that were put on hold under the previous administration.
Yeah, I can see that being a controversial issue. Environmental groups are probably not too happy about that, but I'm sure investors in those sectors are pretty excited right now.
It's definitely something to keep an eye on. The energy sector is a major player in the global economy, and any big changes in policy can have a ripple effect everywhere.
Okay, so energy is one to watch. What about other sectors? Any other potential winners and losers emerging from the Trump playbook?
Well, investing.com also pointed out the potential impact on healthcare. Trump's been pretty critical of the Affordable Care Act, and his administration might push for some pretty big changes to the healthcare system.
Yeah, healthcare's always been a hot topic in politics. But what does that actually mean for investors? Which companies might come out on top and which ones might be in trouble?
It's still too early to say for sure, but pharmaceutical companies and private insurers, they might see some gains if there's a shift away from government-run healthcare programs. On the other hand, hospitals and other healthcare providers that depend heavily on government funding, they could face some challenges.
So healthcare is a bit of a mixed bag, with some potential winners and losers depending on how things play out. Sounds like uncertainty is the theme of the day.
Yeah, uncertainty often goes hand in hand with big political changes. And for investors, that uncertainty can be both a risk and an opportunity. It's important to stay informed and be ready to adapt your strategy as things evolve.
Right, because ignoring what's happening and hoping for the best is not a great investment strategy.
Speaking of things that are probably not a good idea, let's talk about that elephant in the room, the national debt. Investing.com mentioned that Trump's promises of tax cuts and more spending could make that debt problem even worse.
That's a valid concern. Tax cuts can be good for the economy, but they also mean the government has less money coming in. And when you add in increased spending, whether it's on infrastructure or defense, well, that just adds to the deficit. It's a tough balancing act for any administration, and it's going to be even harder given the state of the U.S. economy right now.
Yeah, it's not like the U.S. is exactly rolling in dough at the moment. So what are the potential consequences of all this debt? Is it something investors should be really worried about? Well, having a huge national debt can lead to a bunch of problems. For one thing, it can crowd out private investment. When the government borrows a lot of money, it makes it more expensive for businesses to invest and grow. It can also drive up interest rates because lenders want higher returns to offset the increased risk of lending to a government that's deep in debt. And in some extreme cases, it can even lead to a sovereign debt crisis, where a country can't pay back its debts.
Okay, that sounds pretty terrifying. But are we really talking about a potential debt crisis for the U.S.?
It's not an immediate danger, but it's definitely something policymakers and investors need to keep in mind. The U.S. has a history of paying its debts, and the dollar being the world's reserve currency gives it some leeway. But that debt is growing, and if it's not dealt with, it could become a major drag on the economy.
So what can be done about it? Is there any way to get that debt under control?
There are a few things that could be done, but they all involve some tough choices. One option is to cut back on government spending, but that could mean reducing popular programs or investments in things like infrastructure and education. Another option is to raise taxes, but that could slow down the economy and be unpopular with voters. A third possibility is to focus on boosting economic growth, with the hope that a stronger economy will bring in more tax revenue and make that debt more manageable. But there's no easy solution, and it's probably going to take a combination of these approaches to really tackle the problem.
So no easy answers there. It sounds like we're in for a wild ride no matter what, but hey, that's what keeps the financial markets interesting, right?
You got it. There's never a dull moment. And it's important to remember that challenges also create opportunities. For investors who do their research, understand the risks, and are willing to be flexible, there are always ways to come out ahead.
Okay, so we've talked about energy, healthcare, and that big looming national debt. But we haven't really touched on one of the hottest topics in finance right now, crypto. Forex.com mentioned that Bitcoin hit new highs after Trump's win. But what about other cryptocurrencies? Is this just a Bitcoin boom, or are we seeing a broader surge in crypto?
That's a good question, and it's hard to give a definite answer right now. Bitcoin always gets a lot of attention, but it's important to remember that the cryptocurrency market is huge and diverse. Forex.com mentioned that cryptocurrencies as a whole had a great week, with $901 million in investment inflows. They don't say which cryptos are getting the most attention, but it's probably safe to assume that it's not just Bitcoin.
Interesting. So it seems like there's a general sense of confidence in digital assets as a way to hedge against the volatility of traditional markets. It's like that old saying, don't put all your eggs in one basket, but with a modern twist.
Yeah, exactly. It shows how financial markets are always changing, adapting to new technologies and shifting investor preferences. Cryptocurrencies are still relatively new, and we don't know exactly what their long-term role in the global financial system will be. But their growing popularity and the fact that more institutional investors are getting involved suggests that they're not going away anytime soon. In fact, they'll probably play an even bigger role in the years to come.
Okay, so crypto is definitely on the radar. But let's switch gears and talk about another big player in all of this, the Federal Reserve. I mean, their meeting is just a few days away, and they have a tough decision to make.
No doubt about it. As we said earlier, ING analysts are still thinking they'll cut rates, but there's more and more pressure from inflation. And now we have to consider what Trump's policies will do.
Right, Trump's policies are like another layer of complexity for the Fed to deal with.
Well, it's their job to handle these complicated economic situations. And remember, this isn't their first rodeo with Trump. They had to deal with his unpredictable policies during his first term, too.
True. But doesn't it feel like the stakes are even higher this time? The global economy is still recovering from the pandemic, and there's just so much uncertainty in the air.
Yeah, you're right. The situation has definitely changed, and that will definitely factor into the Fed's decisions. They're walking a tightrope, trying to support economic growth without letting inflation get out of control.
And every move they make is going to be analyzed by investors all over the world. Talk about pressure.
It's a really interesting time to be following the financial markets.
For sure. But let's bring it back to the average investor. What does all this mean for them?
I think the key takeaway is that this is a time to be cautious and really pay attention to what's happening.
So, like, don't rush into anything, kind of caution.
Exactly. We're in uncharted waters here, and it's crucial to understand the potential risks and opportunities before you make any big investment moves.
That makes sense. But I have to admit, a part of me is actually excited about all this uncertainty. It feels like anything could happen.
I get that. There's a certain thrill that comes with market volatility. But it's important to balance that excitement with a good dose of common sense.
Oh, for sure. I'm all about calculated risks, not reckless gambling.
Exactly. And that's where getting good financial advice comes in.
Right. And this is a good time to remind our listeners that what we're talking about here is not financial advice. They should always talk to a professional before making any investment decisions.
Couldn't agree more.
But even the experts can't predict the future with 100% accuracy, right?
Of course not. There are just too many factors involved, too many potential surprises waiting around the corner.
So what's your best guess? Will the markets boom or bust under Trump 2.0?
I'd say it's way too early to make a definitive call. The long-term impact is going to depend on a whole bunch of factors, and a lot of them are still playing out.
Okay, fair enough. So what should our listeners be focusing on in the coming weeks and months? What are the key things to watch?
Well, I'd keep a close eye on what the Fed does and what they say. Their decisions on interest rates will have a big impact on the whole economy.
Right. And what about Trump's policies? Which ones are likely to have the biggest effect on the markets?
His approach to trade and tariffs will be really important. Protectionist policies could lead to volatility in the markets and disrupt global supply chains.
And what about tax cuts? Those could have a big impact too, right?
Absolutely. Tax cuts can stimulate the economy, but they can also lead to more government debt.
It's all about striking that right balance.
Exactly. And that's the challenge facing both policymakers and investors in the months and years to come.
So, to sum it up, buckle up and get ready for a bumpy ride.
I guess you could say that, but I prefer to think of it as an exciting time, full of opportunity and change.
I like that optimistic. And speaking of opportunities, let's talk about some specific sectors that might actually benefit from Trump's policies.
Sure. Infrastructure comes to mind. Trump has talked a lot about rebuilding America's infrastructure, and that could mean big investments in construction, transportation, and energy.
And those investments could create jobs and boost the economy.
Exactly. And that would benefit companies in those sectors as well as the economy as a whole.
Interesting. So While there are definitely some risks associated with Trump's presidency, there are also potential opportunities for smart investors.
Absolutely. It's all about understanding the situation, assessing the risks, and making informed decisions.
Well said. And that's why we're here to help our listeners navigate this complex world and make sense of what's happening in the markets.
We're all in this together. We've covered a lot of ground, haven't we? But there's one big piece of the puzzle we haven't really dug into yet, the global impact. Investing.com, they make a good point that Trump's policies, especially when it comes to trade and how he deals with other countries, could really shake things up for economies all over the world.
Yeah, that makes sense. I mean, his America First approach during his first term, let's just say, wasn't exactly a hit with everyone on the international scene.
Definitely ruffled some feathers.
So what are the big concerns this time around? What should we be watching out for?
Well, trade relations with China are definitely at the top of the list. Those tariffs Trump put on Chinese goods before, they caused a lot of tension and uncertainty, and we could easily see those trade tensions flare up again if he takes a similar approach now. And that could have a domino effect, disrupting global supply chains, pushing prices up for consumers, and potentially even slowing down economic growth in both countries.
Yeah, those trade wars were no joke. Everyone was walking on eggshells, wondering what the next move would be. What about other potential global impacts? Anything else we should be thinking about?
Trump's foreign policy decisions could be a big factor, too. You know, how he approaches international agreements, military interventions, diplomatic relations. All of that can reshape the geopolitical landscape and have a real impact on global markets.
It's like a giant game of Risk, but with real-world consequence.
Exactly. High stakes.
So with all this uncertainty swirling around, what's a regular investor to do? It's tempting to just say, forget it, I'm out, and hide your money under the mattress.
Well, you could do that, but it's probably not the smartest strategy. Remember, volatility and uncertainty, they create opportunities as well as risks. If you're willing to do a little research, stay informed, and keep a long-term perspective, you can definitely navigate these choppy waters.
Okay, so no burying our heads in the sand. But how can investors stay ahead of the curve? What are some practical things they can do to weather this potential storm?
Well, diversification is always key. Don't put all your eggs in one basket. Spread your investments around stocks, bonds, real estate, commodities, even alternative investments like crypto that way. You're spreading out your risk.
Right, don't put all your money on one horse no matter how good it looks.
Exactly. Another important thing is to stay informed. Keep up with the news and analysis on Trump's policies, what's happening with the economy, global events, all of it. You need to understand how these things could affect your investments.
So basically, become a financial news junkie.
Well, maybe not that extreme, but staying informed is really important. And one last thing, remember that investing is a marathon, not a sprint. Don't panic and make rash decisions based on short-term market swings. Focus on your long-term goals and adjust your strategy as you go to stay on track.
It's like that old saying, slow and steady wins the race. Or maybe in this case, informed and adaptable wins the game.
Well put. And remember, we're here to help you every step of the way. We'll keep bringing you these deep dives into the world of finance, breaking down complex stuff, and helping you make sense of this ever-changing market landscape.
So, to all our listeners out there, don't be afraid to dive deep, stay curious, and never stop learning. The more you know, the better prepared you'll be to handle the exciting and sometimes crazy world of finance. And hey, if you've enjoyed this deep dive, be sure to subscribe to our channel for more insightful discussions on all things finance. Until next time, happy investing.